Todd Bubba Horwitz of BubbaTrading.com is here to break down what exactly is going on in the U.S. and around the world. Fed news, macro news, and news out of Canada we'll be talking about in just a minute. Todd, welcome back to the show.
David, it is always great to be with you, and we got a lot of hot topics to cover today.
A lot of hot topics, a lot of trending topics, a lot of topics that are quote unquote pissing people off. And we're going to touch on all of these, okay? So the first, Federal Reserve in the U.S., minutes came out today. I'm just going to read a key paragraph that was released in the minutes. It says, most participants noted that if inflation does not move down as they expect, it would be appropriate for the Federal Open Market Committee to remove policy accommodation at a faster pace than they currently anticipate. What do you make of this statement?
Well, I mean, really what it did is it said that they're going to hike rates like planned. It really gave the market some certainty, which showed a pretty big rally. But what they're really saying is that we're lost. We don't know what we're doing. But the markets feel there's some certainty that this is going to be, the rates are going to be going higher. Okay. But again, if you remember that because of the CPI and the current interest rate, no matter, they could raise 15 times and nominal rates would still be below zero. They'd still be negative. And that's the real issue that nobody is addressing and nobody cares. But this is why I think you saw a little bit of a spike up in the markets after the minutes came out, because obviously this is old news, but they're confirming that they're getting a little bit more hawkish and are going to start to hike rates a little bit.
Okay. Let's talk about, where rates are going to go. But first of all, market reaction to the minutes. Stocks are not rallying, but they're up a little bit. Gold was down earlier in the day, but rallying now. We're nicely in the green as of 2:30 p.m. or rather 3:30 p.m. Eastern time, and oil was down. So we've got a mix of everything going on right now. I'm surprised that stocks and gold are both going up at the same time. Basically, what they're saying is they're not confirming, but they're reiterating that a March rate hike is more possible now. I suspect that should be bearish news for gold, right? But it's not. Gold's not moving down. Why is that?
Well, David, I think we look at too many short-term things for gold. And again, if I tell you that negative rates, interest are really negative, nominal rates are negative. So that, gold's going to hold the stored value, and gold has been in a very challenging pattern. And fortunately, it was driven out, the last couple of days by fear that created that big spike on Friday, Monday. And then yesterday, we saw a little bit of a pullback, which was natural, which is right down to support. And now they're taking off again. And I certainly could see gold making a run at the highs, okay, the all-time highs. But obviously, first we got to get through 1900. But I don't think there's any reason to believe that gold has now certainly turned its pattern and looks really good. And again, when you think about the potential of what, if you look at it, a hard asset commodity, gold and silver, what are they going to be used for? They may have to be used as a currency again someday. So I think you're going to see these prices continue to rise.
Prices continue to rise, but they're not rising now. So what's the trigger for this price rally?
Well, I mean, I think they've rallied now. I mean, they've come. Listen, it was just below 1,800. We're now almost 1,900. That's a pretty nice little rally, and I think it's going to go considerably higher if they can hold on and maintain the buying momentum. Remember, we have lots of sides trading these markets, and when you see they start to break out, the trend traders will start showing up. And of course, you could see some other issues, including the inflationary environment here, which will even bring more light to the gold market.
You're right, Todd. Let me rephrase my question. That wasn't very clear. Yes, we've had a bit of a rally. What's it going to take to rally to new all-time highs this year? That's what people are expecting, because think about it. Inflation's at 40-year highs. Why shouldn't gold be at 40-year highs?
Well, I don't know what it's going to take to rally. I mean, it's going to take obviously a lot of buying. It's going to take, probably some more troubles and some more disasters that will create even some fear buying. And again, but I think you're going to see, David, a very steady rally. Again, anything can change. But right now, the way I look at it, I think you're going to see a very steady rally. We were compressed for like 8 months within, that 1,800 was like a magnet. And once it gets going, I think this is what we're seeing right now. It can really take off and make a much bigger move. And obviously, when any market starts to move in a direction, it starts to gain momentum and speed. So I think as we see the market start to pick up, I would expect wider swinging ranges. But I think there's an outstanding chance that the buyers will continue to participate in this market for many reasons, but certainly from a technical standpoint, which is what I'd be looking at first.
You know what else the minutes said? Let me read this other paragraph. Participants emphasized that the appropriate path to policy would depend on economic and financial developments and their implications for the outlook and the risks around the outlook. Fed officials also said that we will be updating their assessment of the appropriate setting for the policy stance at each meeting. So now they're, I wouldn't say hedging themselves, but it sounds like they're open to the idea of pausing any sort of rate hikes that may be in the works. Is that possible? Can we possibly see such a pause?
With a idiotic Federal Reserve that has absolutely no clue of what is going on and no clue how to operate in markets. Okay, look, they don't understand what the free market system is. They know how to try to manipulate dollars to facilitate others. And at the end of the day, they can do anything. Okay, but they continue to beat this drum. These rates, they should have never backed down in 2013 with the taper tantrum when Ben Bernanke was the Fed chair. They are afraid of their own shadow and really are as clueless as you can get when it comes to understanding how a market functions. Asset classes can price themselves, including interest rates. And the bond markets are telling you that the interest rates are going higher because the 10-year is now back over 2%, okay, on its way to 3, maybe 4. So again, we're going to see these rates rise, and the Fed is going to be twisted to do that. They're going to have to keep up with the actual markets themselves. Instead of getting ahead of the curve, they will be like they always are, behind the curve.
Behind the curve. Well, some would argue that they're already behind the curve. Inflation happened last year. It didn't start yesterday, and now they're just thinking about doing it. Well, they're planning on doing it. I don't know if they're actually still thinking about doing it. That was what their stance was last year. But let's talk about how the markets are going to react. So let's start with gold first and then stocks. So gold had a bit of a nice rally this morning. Again, what's going to happen when we actually do get, let's say, 3 rate hikes this year? Is that still bullish for gold?
Yeah. Gold is in a very bullish formation. Gold will continue to go higher. And remember, depending on how you're looking at it, I look at it in 2 different ways, David. I trade it day to day, but I also own it. And I'm going to be a buyer forever because it's an asset class that will show appreciation. The only question is how fast will it go up and where will it go from here? But at any given time, there can be some moments of stress and strain in trading these markets. And of course, I think you have to remember that the inflation that we have that the Fed refused to acknowledge with their transitory originally is really being created and could be corrected. But the Biden administration refuses to take away the inflation. We don't actually have to have a rate hike, although it would be nice to start getting them because the interest rates are out of whack. But if they decided to let the frackers and shale producers go back into business, you'd cut inflation by 2/3 in 1 second.
What if real interest rates start moving up this year? What if, let's say, inflation stays around 7.5%, maybe 8%? I mean, that's still high, but the level of inflation doesn't change, and you've got rates ticking up. Wouldn't that bring up real interest rates? Wouldn't that put pressure on gold? I'm just making a hypothesis
First of all, you have to believe the CPI number, which I don't believe anyways. I think it's understated because they exclude food and energy, right? So you exclude that. So now you look at the CPI, which is 7.9%. I'm telling you that inflation is much higher than 7.9%. And for the average American, it's probably more in the 17 to 18% inflation, especially depending on your earnings and what you have to do for a living.
Well, headline in CPI is 7.5. You're right, but that includes food and energy.
Only 4%. It's a bad calculation, David. It is a dumb formula that does not fit what the actual world does. Okay, it does not fit that the bulk of our expenses, other than major appliances that may need to be replaced in any given year, it does not count that most people's budget is very heavily dominated by food and energy.
Okay, so how are you trading gold right now and silver?
I'm long gold, and I own and I keep buying physical metals. We got long gold the other day on the pop, and I'm going to obviously stay long. And there's room. There's room to run a long way. There's just obviously there can always be news that can change that for temporarily. But again, you know that the gold bugs are dying to make this thing go higher anyways. And if you can get some momentum behind it, that's how we get a run to the new highs.
Okay. Stock markets, you were previously bearish last time. Are you still bearish now? Again, right, Fed news, minutes, doesn't seem very dovish to me, but stocks are up.
I have to give you a disclosure with what I'm going to say. Okay. I am long the markets here. Well, I'm always long and hedged my long-term equities, but in the short term, I'm long as well. And I don't like it. Okay. I don't like my position, but they are going higher. Okay. So I think that we're going to have a very big haircut. Okay. And I do believe, I don't know if it'll be this year. Again, trying to time that is silly, but I think that there's an outside chance, because when this thing does start going, you're going to see some very big selling. And I'm telling you that I believe before the next sell-off is over, it's going to be a 50 to 60% haircut to the market. And I think, and we'll be prepared for it. But right now, I'm actually long the markets as they're going higher. Okay. So but I don't really like my position, but I do trade those mechanically.
You don't like the position, Todd. You don't like the position. Just sell it. I mean, it's not like you're married to a person here. It's not like it's not like a complicated divorce. Just sell it.
I yell at my members for violating the rules. I can't violate the rules, but I do. Again, it doesn't mean it has to be tomorrow, right? We made a huge rally today. We've been going higher. So again, I just tell you, I'm giving full disclosure. I'm long. Personally, I don't really like it, but I'm not going to get out because I have to follow the rules of the program that I deal with.
Well, let's talk about this 50 to 60% haircut that we may get. Again, what's the trigger here? Is it rate hikes? Markets are already anticipating rate hikes. So is it something else that's going to cause this correction, Todd?
Well, I mean, take a look. First of all, look at the interest rate market. Okay. Look at the food environment, the producers, the farmers. Farmers pay a much higher interest rate to produce. Their input costs have gone up so dramatically that I'm betting you that some farmers will not be able to plant this year. I believe we're going to have a shortage in food come harvest time next year. Okay. And if you continue to have bad weather in Brazil and other areas, you may have a shortage in food. That is going to create some major problems. Higher interest rates are going to create some major problems. And you're going to start to see, when this thing starts to go, there's a big percentage of people in the markets right now that would prefer to be in a passbook savings account. Okay. And they're going to sell at first opportunity. And I think that can be the trigger. And as we've seen in every time in the past, once they get rocking, they can continue to go much, much lower. And I think that there's an even money chance that we do have. But again, I don't know if it's going to be this year, but I think when it's all done, we will have a 50 to 60% haircut.
All right, let me ask you this, 50 to 60% haircut. Obviously, nobody knows where the top is. Nobody knows where the bottom is. But at what point would you start selling your positions, the long positions that you currently don't like? How far does the market need to start correcting? The algorithm
will change. See, I'm using an algorithm that will change, and it'll catch the trend. It's designed to catch the trend. So I'll catch the downtrend when it comes. I might miss the beginning, but I'll always miss the beginning. I'll never get, I don't ever sell tops. I never buy bottoms. I have to wait.
Very few people do. Yeah. Okay. Well, can you share with us some of these trends that your algorithm is tracking, or is that just secret sauce?
We track. I mean, right now, if you looked at them, we're long the indexes. Okay, the equity indexes. We're long gold. We're long silver. We would be long platinum, but it's not liquid enough to trade. We're long crude oil and have been so for almost a year. Okay, we're long the grain markets except for wheat, and we're long the protein, the cattle markets, and the hogs. Okay, so we're long a lot of stuff here because again, inflation is obviously helping those products for now. But again, when the consumer runs out of money and can't buy those products, and the farmers can't deliver them, and the supply chain continues to break down, that will be some of the stuff that will start the major beatdown when it does come.
Okay, those are very important indicators that you just mentioned. So we'll follow up on those things. It's possible that we might have a meltdown in the same style as March 2020. Markets went down really quickly. Very few people had time to really respond to the markets when they were falling. I'm talking about the stock markets, of course. Well, gold as well. Everything went down at the same time. Cryptos, everything just got hammered at the same time. In that scenario, what would you do?
Well, I mean, we'd be buying, first of all. I mean, I wouldn't be buying right into it. But again, now this is where you have to separate my positions. My equity portfolios, my retirement accounts, everything would be buying into those things because they're already hedged. So I'm using derivative markets to hedge those. So I'm collecting on one side to accumulate more stock. We would get short at some point. And again, even during the COVID, when you're talking about this big sell-off, we were actually buying stock on the way down, and we actually reversed March 24th of 2020, okay, and got back to the long side. So we carried the long run for quite a while. And I think that you just have to remember the first thing I could advise any investor is never panic. And if you have stocks that you own or metals that you own that are solid, which they are, and if you're fundamentally strong companies, don't sell them. Don't panic into a move when everybody else is panicking, because when everybody else is panicking, they're wrong.
Okay. I got to bring up politics now because this is where I'm living in Canada. This is, like I said, pissing off a lot of people. So as you are aware, the news out of Ottawa, truckers have been protesting for weeks. They've gridlocked the city. The mayor of Ottawa has a couple days ago, last week, announced a state of emergency. And now the federal government has responded. Justin Trudeau's government has responded this week by invoking the Canadian Emergencies Act. Now, just a bit of background. The Emergencies Act became law in 1988. To my knowledge, this is the first time it's actually been invoked in the country, and it's only being done in the event of a national emergency. And this is how the Canadian government on their website defines a national emergency. It says here, a national emergency is an urgent, temporary, and critical situation that seriously endangers the health and safety of Canadians, or that seriously threatens the ability of the Canadian government to preserve the sovereignty, security, and territorial integrity of Canada. There are 4 situations it outlines: a public welfare emergency, a public order emergency, an international emergency, or a war emergency. Well, we're definitely not at war. One could argue if any of the other things are under threat, under siege. But anyway, so to sum up, truckers have protested loss of freedoms, vaccine mandates, and now the government is responding by basically taking away more of their freedoms, because now the governments, while they can do a lot of things, but I want to talk to you about their right to basically seize particular protesters' bank accounts, stop transactions, seize financial holdings if they deem these holdings to be a threat or to be involved in some sort of terrorist activities. What's your response to all this?
Well, I mean, that's where governments are going anyways. Okay, they already have a lot of rights that they can go to. And this is when people continue to vote in the directions that they vote and they continue to give up their freedoms. Okay, that's exactly what the government, you're approving the government to do this because you keep voting in the same people that don't belong there. We have the same, listen, in the United States, you have the same problems happening. They're taking away your freedom. Okay, why are we having in this ridiculous inflation when we could make our own oil and we should be a net exporter instead of importer? Why are we dependent on Russia and Saudi Arabia and China? We shouldn't be in those positions. The same, and so the truckers weren't protesting the vax mandate, although that was the story of it, but they were really protesting freedom. And again, here Trudeau does and says, okay, I'm going to take away more of your freedom, and we've already destroyed much of that. And this is what we do when we allow the governments to take control. And of course, when Ronald Reagan said, anytime somebody says that I'm here from the government, I'm here to help, you better duck and sew up your pockets because they're going to take your money.
Okay, well, get this. Okay, so the Canadian Deputy Prime Minister, Chrystia Freeland, announced in a press conference earlier this week that as part of the Emergencies Act, they are broadening what they're calling the terrorist financing rules to include crowdfunding platforms and cryptocurrency. So basically what this is it targets these changes cover all forms of transactions, including digital assets such as cryptocurrencies. It sounds to me like, I haven't seen or read of any particular cases yet of seizures, but it sounds like they're heading towards the route of not just seizing your bank account or freezing your bank assets, but also seizing your cryptocurrencies. So
that's not so easy at this moment. If you're carrying in a cold wallet your cryptocurrency, they don't have any access to that. This is the whole.
They can go to your house and say, hand over your cryptocurrencies. No,
well, they don't know that you even have one. I mean, again, this is a little bit trickier. Okay, and this is one of the things. This is one of the things that makes crypto so valuable right now, and I think why you're starting to see more dominance and more play there is because you can get out. Like if you're in Ukraine and you want to get out, you can't walk out with $1 million worth of gold, but you could walk out with $1 million in a flash drive of Bitcoin. So, again, this is a threat that they couldn't really follow through on unless you leave it in the public space. If you take it in and put it in a cold wallet that's in your pocket or is hidden somewhere, they have no idea and they're not going to find it. But again, this is why the central banking system around the globe is so much against the cryptocurrency world for those very reasons, that they lose control of their manipulation of the currency.
Well, so this the broadening of the terrorist funding act was in response to the GoFundMe that the truckers have made. They've raised so far, I'm reading an article from a few days ago, they've raised so far $19 million in funds, but the government blocked those funds from actually reaching the convoy. And so now people are starting to think about fundraising in Bitcoin and other cryptocurrencies. For any other Canadians who know more about the story, just comment below on what you see is going on. But anyway, Todd, this doesn't affect you directly. You're not in Canada. You're in the U.S. But just put yourself in the shoes of Canadians or maybe a protester. If this happened to your country, which I don't know if it would ever, because the U.S. is a lot bigger. I don't even know how they would do this. But you're saying this is going to happen everywhere. How's that happening, and how would you react?
Well, they already have, the United States already has the power to do it anyways. When they passed the Terrorist Act after the 9/11 bombings, I mean, they've given up freedom, and they continue to drag and take your freedoms every single day. They take something else away. They take away your ways to communicate. Okay, if you're conservative, you have nowhere to go, and you have a political system that is loaded with criminals, okay? Both sides. It doesn't matter who you're for here. They continue to deal with these lobbyists and pay off to get these deals. It's the same thing behind, for example, marijuana. Marijuana should be federally mandated legal now. It's not. Why? Because they're waiting for the big companies to get it, and they're destroying the little companies. You're turning the United States, and this administration especially, is trying to turn it into a socialist nation, okay, as they destroy freedoms of every kind here. And they can already go into your bank account. The IRS can go to your bank account anytime they want. So they can do many things here because everything is public. And the more technology, the more public things become.
Give me some examples, Todd, of your freedoms that you feel like are being taken away from you over the last decade or two.
Well, how about freedom of speech? That's the first one, right? You cannot use a Twitter or Facebook if you have a conservative opinion. They take you off or they block you, okay? So there's a freedom that they're taking away. The more that they're trying to charge taxes, the way that we just recently took out oil.
Hold up. Now, Todd, Twitter is not a government agency. I mean, Twitter is just a bunch of people who may not like conservative views.
Them behind the scenes. Look, you can look at it any way you want.
Yeah.
To me, that is controlled through the government. Okay. It is putting down those mandates on these companies, saying you got to block that conversation because they want to take over. I mean, you have a Speaker of the House that's now coming out with a bill saying, well, maybe Congress people shouldn't hold stocks. Well, of course, she accumulated $150 million while she was in office. Okay. Again, there's every single thing they've done throughout all of these technology has only really destroyed individual freedoms because they have so much more control. The COVID was a total destruction of freedom. Okay. We should have never been shut down. They've systematically put out small business out of business. They destroyed a generation of children that were not as at much risk and should have been exposed to it anyways by taking them out of school for 2 years. Okay. And now, because the election is close, suddenly the max mandate just got lifted.
Okay. Well, sure. All right. How is all this going to impact markets? You're talking about a deterioration of your personal freedoms, perhaps civil liberties down the line. I'm not disagreeing or agreeing with you. I'm just assuming you're right, assuming America and the rest of the free world is headed down that path. How will investors feel any difference in their portfolios?
Well, by the time the government gets through, there won't be investors left except for oligarchs. Okay. I mean, they're taking the United States and trying to make it a two-class system. Okay. And this is why the major corporations like a Facebook and a Google, they want regulations because they don't want the competition. They've systematically destroyed small business in this country. Now, the Democratic Party is supposed to be the party of the small. But if you go by and you look, small business is out of business everywhere. There's very few remaining because they weren't allowed to be open while Walgreens, Walmart, and those were allowed to be open during the COVID crisis. Okay. Your local pharmacy, who many people prefer, was not allowed to be open. So he's out of business today while they're still thriving right now. I mean, look at the supply chain. Okay. This could be solved as well, but they don't want to solve it. They are trying to create this mess and that it's only getting worse.
Okay, I'm just going to close on this statement. So, the broadening of the Terrorist Funding Act in Canada is significant because now they're targeting cryptocurrencies. People have been talking about banning cryptos in the West for a long time. I'm looking at the Bitcoin price. It doesn't seem to be moving. Doesn't seem to be reacting at this at all. Maybe Canada's just too small of a market. But China's done that.
Bitcoin's at 44,000. It's been under some pressure, but look, you know that the SEC and government agencies here have approved it because you now have ETFs, you have options, and you have futures. So the CFTC and the SEC, now what the SEC is going to do, and what they've already started to do, is they're going to register something. They're going to call some of these unregistered securities. They're going to classify them as a security, which makes sense on part of that. But they're going to destroy, there's 17,000 cryptos right now. They go up every day because that's also a great place for the criminal mind that knows how to scam people to steal. But the big ones, $10 billion or more market cap, I think they're terrific. I'm an owner. Okay, and I think that they're going to go farther.
Governments can, I guess, prevent terrorists or stop terrorist activity by seizing bank accounts, which is, I guess, is what they're trying to do in Canada. I'm not saying their truckers are terrorists. That's the label that the Canadian government is using. All I'm saying is that in the States,
that's how they were able to approve the bill they're putting. Yes.
So in the U.S., what tools does the government have? Because, like you said, they approved cryptos. They can't. Are they going to start seizing? Let's say something similar happens. Are they going to start seizing people's cryptos? Are they going to start freezing people's bank accounts?
They're going to try to seize whatever they can. They're going to step in wherever they can. They do have a little bit more power here, though. Okay, because they can already go into your bank account, and again, they're going to eventually, and I would say sooner rather than later, you're going to have a digital currency in the United States. It's already being used.
So you don't actually own your money. If the government can go into your bank account, you don't actually own your money, then, do you?
No, you don't. Again, they've made your currency worthless anyways. But they're going to be a digital currency so they can even hide more of their bad decision making and try to hide more of this inflation because there is no printing money. It's just adding digital currency, which continues to bring the value down. Look at the inflation again. We can go back to inflation. It relates back to that.
What about your gold holdings? Can the government go and basically do what they did in the 30s?
They can try and find mine if they want. I mean, they can do that. They've done that in the past. Okay, they can confiscate, or they can try. So again, this is not new. People are very afraid to hold big portions of gold in places, especially at home, because they can be confiscated. All
right, Todd. Thank you for your insights. Very thorough analysis. Yeah.
Listen, Dave, let me just close on this. It's a very scary time in the United States because the government. The Biden administration is all political right now. They're driving the Ukraine-Russia narrative, which is not going to happen. Okay, I've got sources in Russia, seriously, that tell me there's no chance that they're all laughing at President Biden there. Okay, they're creating this narrative, but the biggest single thing is the ability that we have to frack and shale produce oil and natural gas and be a net exporter, which would satisfy our debt and take inflation from where it's at and cut it by 60% or 70% in the stroke of a pen. Okay. Because oil is no business being where it's at now at $95 a barrel. It should be at $30 a barrel because we've got plenty of supply, but that's what you do when you take away the free market.
Mm-hmm. All right. So Ukraine and Russia is not going to happen. So I guess that's not going to be a trigger for a market correction then, because people were looking out for that. No. All right. Well, anyway, Todd, thank you again for coming on. We'll speak to you next time.
I appreciate it, brother.
Appreciate it as well. And thank you for watching Kitco News. I'm David Lynn. Stay tuned for more.